Oh, good morning, good morning, good morning. And look at how beautiful it is outside today. The sun is just coming up. Not too many clouds in the sky. It's going to be a beautiful day here in South Florida. And here I am with my Dunkin' Donuts. It's my second full cup of coffee, but I'll put that down here for the moment as we get through what's going on for today. What do you need to know and what's going to happen as we go into the weekend? Good morning. I'm Kenny Polcari, your host of the party. And today is March 18th. 2022. And what is it that we need to know? Well, investors continue to put money to work post the Fed meeting. Everyone feeling a little bit better with some clarity. The Bank of England raises rates for a third time in a row, citing inflation at a 30-year high. Oil moving back above 100, trading at $104.50 a barrel. Vlad is losing his shit, and Joey is set to call Gigi at 9:30 this morning. And what are we having for dinner tonight? We're going to have the Chilean sea bass bathed in a sherry cream sauce. It sounds difficult, it's easy to make, and it is so good. All right, so good Friday morning, and what a week it has been. We finally got through the Fed stuff. It's now behind us. We know what's in front of us. Hike after hike after hike. And investors, and more like the algos, can't get enough of stocks as the clarity of the Fed's intention is now known. The rally in stocks taking us up 5% nearly for the week. That was coming into this morning. And at the closing bell yesterday, the Dow added another 420 points or 1.2%. S&P up 54, 1.2%. NASDAQ up 180, 1.3%. The Russell up 35 at 1.7%. And the transports gained 210 or 1.3%. Away from the U.S. macro data, investors are beginning to consider or reconsider what impact the war in Ukraine is ultimately going to have on stocks. And remember what we've been talking about. Geopolitical events can and do cause short-term chaos in markets, but in the end, do not price stocks. And so investors are starting to kind of put this into perspective. Oil, which has been all over the place lately, surging 45%, on top of the 25% rise since January 1st of this year, to a high of $130 a barrel in the days after Putin invaded Ukraine, has since retreated. Was down as much as 28% and found a low near $95 earlier in the week. It has subsequently moved back above $100 to find stability just around $104.50 this morning. Yesterday, two of the big banks, Morgan and RBC, upgraded their price targets for oil and expect to see it settle in or near $120 a barrel this year. RBC puts Brent at $150, and if that's true, West Texas Intermediate should really be closer to $140 a barrel. And this will continue to fuel the inflation monster, no matter what the talking heads say. And the latest shutdowns in China and China manufacturing in their cities and their ports due to another wave of COVID will only add more pressure to the supply chain and the cost structure. So again, to hear some Fed officials tell us that they expect inflation to ebb by the summer is a little bit insulting, but let's move on. Of the 11 broad S&P sectors, it was a green day across the board. Energy leading the way, up 3.5%. Basic materials up 1.9%. Healthcare up 1.6%. Consumer discretionary, XLY up 1.8%. Real estate, XLRE up 1.4%. Industrials, XLI up 1.3%. Financials, XLF up 1.2%. Communications up 1.1%. And consumer staples, tech, and utilities carried up the rear at just about 1%, a little bit less. The 10-year Treasury ended the day yielding 2.15%. The 30-year ended yielding 2.44%. Fixed rate 30-year conforming mortgages are now 4.5%. And if you need a jumbo greater than $647,000, you can expect to pay closer to 5%. Gold rose by $33 or 1.7% to end the day at $19.47. Oil fell $1.40 yesterday to end the day at $95 a barrel. Today it is up. Bloomberg Commodity Index rose 3%, adding more volatility to the inflation story. Talk of a coming recession is now at the top of the agenda. While many economists expect to see one by 2023, the Fed and the administration is working hard to parade around a number of analysts that are trying to debunk that story. Recession, don't be ridiculous. But I wonder what they'll say when the Fed has to get more aggressive in the months ahead as inflation pushes higher. And it is going to push higher. Look, Jay Powell told us on Wednesday that the odds of a recession are not elevated and that the U.S. economy can flourish even if they withdraw stimulus. And with Fed funds rate at just sub 2%, he might be correct. But if inflation keeps ticking towards 10%, and don't think that it won't, the Fed is going to need to get more aggressive. And Jay left that door open if they truly want to slow it down. And when they do, a recession will be difficult to avoid. Let's just not sugarcoat this. Let's not just say everything's okay when there are real challenges ahead. And again, that does not mean light the place on fire. It just means adjust your portfolio if you need to. Look, anytime we get a headline, economic or geopolitical, that jolts the markets in an anxious environment, we can expect stocks to retreat because it's always shoot first, ask questions later, until investors can discount what reality really is, something that we just witnessed over the last couple of months, right? Which is why I say don't make an emotional decision for all those people that bailed when the market was under pressure. I continue to favor the value sector and the big, boring, yet beautiful Americana multinationals that are good divvy payers as a larger weighting in my portfolio. If you don't want to pick individual names and you want broader dividend exposure that will blunt some of the downside, then consider some of the First Trust products out there, right? FVD, which is the First Trust Value Line Dividend ETF. RDVY is the First Trust Rising NASDAQ Dividend Achievers ETF. And SDVY is the NASDAQ SMID Rising Dividend Achievers ETF. They're great products. Take a look at them, and they are way outperforming the market. This morning, U.S. futures are under a bit of pressure, which should be no surprise at all after this week's surge. Dow futures down 200, S&P's down 30, the NASDAQ off 90, and the Russell down 14 points. Speculation over Vlad's mental health is now top of the agenda. I mean, have you even heard his latest rants? Peace talks not showing any signs of progress, and his latest comments on Biden and the allies, as well as Russians that don't support his fight, are more disturbing with each passing moment. Joey is due to call Xi Jinping today, right, from China at 9:30 this morning, encouraging him to step back from supporting Vlad as the conflict continues, and that he will warn costs if China doesn't back away. So let's see how that goes. As rumors suggest, China is supporting Russia with weapons and armed drones. And look, China is expected to tell Joey that they will never accept U.S. coercion, that they will punish any company that puts pressure on China during this crisis, and that China remains fair and objective. Yeah, how's that going? When this comes to Ukraine, right? Xi will be clear that if Joey pokes China, he runs the risk of wreaking havoc on the U.S. economy because China will respond very quickly, and we have left ourselves vulnerable to China. So we have no one to blame but ourselves. I guess the question really is how is Joey going to respond? And we aren't even talking about Taiwan yet. Just wait until that conversation happens. Eco data today includes existing home sales, and they're expected to be down 6.2%. And that does make some sense because you can't get anything to remodel, right? Supply chain issues, so people don't want to be bothered. European markets are lower across the board. Yesterday, the Bank of England raised rates for the third time in as many meetings, noting that the UK inflation is running at 30-year highs. The war has sent energy prices surging, and that has upped their inflation forecast to 7.25%, which they say is going to peak next month. I don't know how that could be, but let's see. At 6:45, markets across the European region are all down between 0.5% and 1%. Bitcoin this morning is trading right where it was yesterday, 40,600, and Ethereum is up just a tiny bit to 2,800. The S&P closed at 4411, closing right on the high of the day, leaving us only 40 points or 1% away from the trendline resistance I identified at 4450, which is the long-term trend line. But remember, the S&P did suffer a death cross, so the downtrending short-term trend line is at 4437. So we could see some pressure right there between 4437 and 4450 as investors kind of sort this out. In any event, you got to stick to the plan. Call me to discuss. I'm happy to talk to you. So what are we having for dinner tonight? It's Friday in Lent. We're having Chilean sea bass in a sherry cream sauce. Oh my God, delicious. Preheat the oven to 425 degrees. Now, you want to take your fish, you want to rinse it, pat it dry. You want to marinate the fish in a little bit of olive oil, fresh lemon juice, and salt and pepper, right? That's it. That's what I do. But if you have a favorite additional seasoning, feel free. Coat the baking pan with olive oil and place the fish in the oven. You're going to bake it for about 15 or 20 minutes, depending on how thick of a piece you get. While this is baking, you're going to prepare the sherry sauce. For this, you're going to need butter, garlic, minced shallot, clam juice, heavy cream, sherry, and salt and pepper. You're going to melt the butter, about a half a stick, on low heat, right? You want to smash and then mince 1 clove of garlic. Add that to the butter. You want to saute that around now. Now add the minced shallot and 1 tablespoon of clam juice. Stir it all up, mix it together. Now, add the sherry, maybe 2 tablespoons of sherry and 1 cup of heavy cream. Simmer it for 5 minutes. The sauce should reduce by about 1/4 of it. Season it with salt and pepper. Taste it. Make sure it's all good. Adjust if you need to. Now remove the fish from the oven and present it on a warm plate on a bed of wild grain rice. Spoon the sherry cream sauce on top and serve it immediately. You can complement this dish with a side of steamed string beans maybe and a large mixed salad. Total time from stove to table should be about 45 minutes. You want to enjoy this with your favorite chilled white wine. Don't ask, because you know what I like, Pinot Grigio Santa Margherita, because that's what I would have with this meal. In any event, Friday, the day is just starting. We'll get through it. I think the markets will be okay. Don't be surprised if they back off a tiny bit. The weekend is here, so pay attention because so much can happen over the weekend. Until Monday, take good care.